ascending and descending triangle patterns. Going to share with you some strategies and tips and do some myth busting. Going to give you my secret on how to trade these puppies. All right, so first of all, the classic traditional way is wrong. And you might say, Barry, you got quite an ego on you there. How can you wear that ego? Well, I don't really have an ego, but I have been trading for 50 years and I've lost a lot of money. And so that's actually how I've learned most things, is by losing money. And so having lost a lot of money, I can tell you certain things do not work that they tell you in the classic books and that you'll see all over the YouTubes. That's the proper terminology, by the way, the YouTubes. So let's take a look here. This is what would be typically, a lot of people would see this as an ascending triangle where we've got these highs matching here. And then they maybe connect these lows here, depending on if they want to draw to the real bodies, the wicks, whatever. So we kind of see this kind of pattern. Boom, up. Okay, boom, down. Okay, and then it goes back up. And so they call it an ascending triangle because we have equal highs, but higher lows. And the conventional wisdom, which is conventionally wrong, is that this demonstrates that the market is pushing up, and therefore there's a pressure building to the upside, and the traditional approach is that therefore this is going to break out to the upside because we're getting higher lows. That's the logic behind it. And the logic is total BS, bull cookie, as we like to say here at Top Dog Trading, because we don't swear, so we just say bull cookie. And they say, oh yeah, this is going to break it to the upside because there is upward pressure from the bottom. But it's unfortunately not that simple. But fortunately, on the other end, there is a simplicity to it that actually makes it work. So let me show you what that is. First of all, let's see what actually happened here. So we had these higher lows, equal highs, and as the market goes forward, kablambo. And that's another one of those official technical analysis terms that only professionals use. So it did not break out of the high. It broke down to the downside. And that's because whether it's an ascending triangle or descending triangle makes no difference as to whether it's going to break to the upside or the downside. So the old conventional wisdom that ascending triangles break to the upside, descending triangles break to the downside is, as my grandfather used to say, humbug. Okay? And he was not a trader. Okay, so we've got our descending triangle, which again, according to conventional wisdom, should break out to the downside. And as we could probably guess, that we're already not going to do that. And no, indeed, we were broke to the upside. So this stuff is all shenanigans. Trying to mix up my vocabulary here for you today to keep you entertained. That's right. We provide not only education, but also entertainment. So edutainment, I think they call it these days. Edutainment. Anyway, trading is a serious business, but I figure, hey, if we can have a little fun in the process, why not? We're given the choice. Plus, helps keeps people's attention. All right, so now, and by the way, symmetrical triangles, I won't even cover those right now because those are where you have a lower high and a higher low, and they can break either way. The truth is, all three of these type of triangles can break either way. So now the question comes, well, Barry, how do I know which way the triangle is going to break out? Glad you asked, because that's the secret, and that's what we're going to talk about right now. So what we need to do, we want to go to the next higher time frame. And the key to determining whether a triangle is going to break to the upside, the downside, is momentum. And we want the longer term momentum. Now, momentum is the strength of the money flow. So if that changes, if that shifts, then we want to shift our trade, or we want to trade in that direction. And so that's what we're looking for. So whether it's symmetrical, whether it's ascending, descending, none of that really matters. It's not the pattern that matters. It's the money flow. How is that money flow going through the market? It all comes down to supply demand. So in any type of triangle, all three of them are really the same type of dynamic. They are a lowering of volatility. They fit into the same category of a trade that the Bollinger Band Squeeze does. It's a squeezing of volatility, and then we're looking for an expansion of volatility out of that. So generally, we're going to see momentum slowing down, slowing down, slowing down, and then this is why I love trading triangles and Bollinger Band squeezes in some cases, but trading those patterns is not enough. We've got to then look for the momentum of buying and selling, supply and demand. Easy for you to say. Okay, so and another tip we have here is this down here, this wick that we already looked at. So it comes down here, pierces the wick, pierces the bottom, comes back up. Now, boom, we get this next candle. Now look, I've got my crosshairs aligned. So when you look at the next higher time frame, now I use a 1-to-3 ratio between my time frames. This is very important. If you use a ratio that's longer, such as, for example, I got a daily chart on the right. If you used a weekly chart as your confirmation, that's a 1-to-5 ratio because there's 5 days in a week. And that disparity is too much. So that means that the longer term chart is going to give you a late signal. So 1-to-3 is just perfect. 1-to-4 works okay, but 1-to-3 really dials in the accuracy. And so if you see, what we're looking at is momentum on the longer term time frame swings back up. So I can actually trade inside this triangle, and that's how I trade triangles. I do not trade them on the breakout. I trade inside that consolidation before it breaks out to one side or the other. And that's another very important thing in professional trading is we're in before everybody else is. So we are getting in with roulette entries, and this is one of the way we do it. We look for momentum shifts in the market. So let's annotate this so you can see what I mean. So let me bring back my drawing tool, and we had our lower highs, and then we had our basically equal lows, descending triangle. But as we get to right here, then we see that, first of all, we had the wick that rejected these lows, pierced below that. That's where your breakout traders are going to get fooled and lose their money. Comes back up. Okay, get this bar here. Now we're still inside the triangle. That's where I take the trade. That's where I buy. Because now I've got momentum on the longer time frame. Okay, and by the way, here's another thing. This is really important. People will look at these highs and lows, and people will look at different highs and lows. And it becomes subjective. I've seen people draw some crazy triangle patterns based on which highs and lows they're looking at. And I look at the chart and I'm like, what? Why would you use that high? Why would you use that high? Why would you use that low? Why would you use that low? It's objective. So you need to bring an objective way of measuring, of identifying those highs and those lows so that you have an objective rule-based system. And that's where my cycle indicator comes in. Cycle indicators actually identify an objective high, an objective cycle high, and objective cycle low. And so when we draw triangles, we have identifying objective highs and objective lows to draw triangles. Therefore, it's all the same, and therefore we can base it on rules. And the cycle's based on mathematics, which is, generally pretty good. Not saying that math is an exact science, but well, maybe it is. I don't know. I've always been lousy at math. But if you want to get that indicator, by the way, just go to indicatorwebinar.com and give it to all my viewers for free. And go check it out. And by the way, there's also a tutorial there, video tutorial on how to trade it. It's actually already an indicator that's hidden in your charts. But I show you where it is, how to make a small modification to it. And then, of course, the most important thing, just like all my tutorials, how to trade it. So that's the most important thing, the education, the knowledge.